Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and here is a look at the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, पाजी ये 100% सही किया।
SBI is the banker to every Indian.
The fresh COVID-19 cases reached 4,300 on Monday, bringing some semblance of normality. Russian markets and public transport also conveyed the same feeling that old days are back. World over, companies have started calling their employees back to the office. But a breeze of change is also blowing through across the sectors. Several big firms and a large number of startups are giving their employees the options to choose between home and office. But some want the old order back. Our next report offers a peek into it.
Many of you may have received that email by now, the one where your boss wants you back in office. Now that COVID-19 cases are declining, some of you might be relieved, while others might be dreading the long office commute. Either way, it's inevitable that companies get back to some semblance of pre-COVID normalcy. Let us dive into the details of how India Inc. is handling the back to office drill. Companies across sectors are now opening up their offices. However, there is a clear divide. On one hand, there are those who want all their employees to work from office, while on the other, IT companies and startups are leading another group that is opting for a hybrid workplace model. Globally, Google has asked its employees to return to office from April 4 for 3 days a week. Though in India, it is still on a voluntary basis.
I think one thing is for sure that hybrid workplace is taking over. Gone are the traditional ways of doing work where you wanted 100% of your team to be present in the office. While I do believe that a lot of workforce will be called back to office, but there is a roster being drawn out on which functions need to come back to office for how many days and which are the functions that can operate remotely. Some functions will be told to work from home remotely 100% of the time. Some will be told to build a 50-50 capacity. That means that they have to be in office, let's say 2 days or 3 days in a week, while rest of the days they can work from home. While there, of course, will be some functions that have to come to office no matter what, which is 100% of the time. So that's how they are kind of compartmentalizing. Of course, they are taking inputs from employees as to whether they can do a certain job working from home and whether it is doable for the organization as a whole. But the yardstick or the measurement is on the basis of both the people equally discussing it out. And I won't say all of them want to work from home, Krishna. There are a subset of people who do want to work from home. And if organizations do believe that it's a valid ask and it works for the firm, they do take it under consideration and figure out under what model does it fall. Does it fall under 100% remote, 50% remote, or 100% physical?
IT services sector companies are encouraging senior managers and leaders to attend office in person for 3 to 4 days a week. To start with, take the case of Bengaluru headquartered Infosys, which said that though over 96% of its workforce is operating remotely, the company is looking to gradually increase the number of people coming back to office over the next 3 to 4 months. A senior Infosys executive said that the future of work will be hybrid. It will be a mix of employees coming in daily, some working fully remote, and the rest using a mix of both modes. He added the company expects a hybrid model in which approximately 40 to 50% of employees are likely to work from office on any given day. Tata Consultancy Services had earlier announced the 25-25 model. This model will require no more than 25% of its employees to work from an office at any given time, and they also do not need to spend more than 25% of their time in the office. The company said that senior management level executives have started working from offices regularly. Once the employees are back in office, the transition to the hybrid model will start. At the other end of the spectrum are the new age startups, which want to change the way people work. In November 2021, Swiggy introduced its Future of Work policy. The food tech firm offers a flexible working model for all employees based on their nature of work. Unlike the IT sector, some industries are aiming to get back to office with full or high capacity. In early January, during the surge in Omicron cases, the JSW Group started operating with 50% of its employees at its offices in Mumbai, while the rest worked from home. But from the first week of February, the company is working at full capacity in its offices. Tobacco to Hotels major ITC has ramped up its office presence across locations to 2/3, effective March. It was limited to 30% earlier. The pharmaceutical industry is no different. After a brief work from home spell in January during the third wave of the pandemic, most of the companies in the sector are back to office now. Jayesh Desai, Executive Director at Torrent Group, which has a presence in power and pharmaceuticals, said that since June last year, the company had started asking its employees to return to office while maintaining the usual safety precautions. The country's largest drug maker, Sun Pharmaceuticals, has also asked its employees to report back to office. A company spokesperson said that only those employees who are COVID positive or have a family member who is infected are allowed to work from home. The auto sector is also focusing on getting people back to office at least a few days in a week. At the Tata Motors corporate office, employees continue to show up 2 to 3 days a week. Mahindra Group has a flexible work model as well, and it is up to the employees to decide whether they want to work from home or come to office. So, India Inc., like the rest of the world, is still testing the waters. Experts are not sure if the pandemic is over, or there are more spells in waiting. So it is in the interest of the company if employees are able to work efficiently from both the places, home and office.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Meanwhile, Russia is on a war path to bring back another kind of old order. It has invaded Ukraine, leaving the world in shock and disbelief. Subsequent sanctions imposed by the West have economically cut off Russia from the rest of the world. Ukraine too is in a similar situation. And some of the trade void left by these two countries is now being filled by India. Demand for Indian wheat and several other commodities has risen. Our next report tells about the long-term impact, as these sanctions are unlikely to be lifted anytime soon.
Russia's invasion of Ukraine has thrown the global commodity markets into a disarray. Crude oil, natural gas, coal, wheat, corn, aluminium, steel, copper and palladium are some of the commodities that have seen a sharp rise in prices. The war has also pushed global wheat prices to a 14-year high, since Russia and Ukraine together account for 30% of global wheat exports. India is the second biggest wheat producer in the world after China, with a share of 13.5% of the world's total production. However, India's share in global wheat exports is just 0.54%. Wheat stocks in India's central pool are pegged at around 26 million tons, that is 248% more than the quantity required to be stored as on April 1st each year. Disruption in global wheat supply is already being felt as Ukrainian ports remain closed and Western sanctions turn buyers away from Russian wheat. Egypt, Indonesia, Algeria, Brazil, Bangladesh and Turkey are among the world's biggest wheat importers. Just 3 countries, Egypt, Turkey and Bangladesh, bought more than half of Russia's wheat in 2019. Russia and Ukraine cover more than 70% of Egypt's imported wheat demand. The ongoing geopolitical crisis, however, has thrown up an opportunity for Indian exporters and farmers. Last week, Food Secretary Sudhanshu Pandey said that India's wheat exports have picked up, adding that a rally in global prices gives India an opportunity to gain market share. India's new wheat crop is also slated to hit the market from March 15. Other global players will enter the market only after the end of the summer in respective geographies. Therefore, Indian traders will look to make the most of the next few months when the global supply will be limited. Indian farmers are also reaping the benefits, as the new crop that has started arriving is being sold at 15% higher than the MSP rate in several mandis of Madhya Pradesh and Gujarat. Bangladesh, Nepal, United Arab Emirates, Sri Lanka and Yemen are the top buyers of Indian wheat. Other importers who were dependent on Russia and Ukraine could also turn to India. Lebanon is already in talks with India to import the grain. India is set to export a record 7 million tons of wheat this fiscal, breaching the record of 6.5 million tons set in 2012-2013. If global markets remain choppy and no restrictions are imposed on exports, India's outbound shipment of wheat can touch 10 million tons in FY23. Export demand for Indian corn has also spiked as buyers look for alternatives to Ukraine, which is a leading producer and exporter of corn. Similarly, Indian metals companies are likely to benefit in the short term due to the escalating geopolitical tensions. Russia is a top steel and aluminium exporter.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
The war is taking a heavy toll on Indian markets. It has brought the rally, which the markets have seen since March 2020, to a screeching halt. There was no respite on Monday too, with the Nifty 50 index slipping below the 16,000 mark. Is there more pain in store for the markets, or should you use the fall to buy? Business Standard spoke to leading market experts to know what they think of the current situation and their investment strategy.
Monday's bloodbath on Dalal Street left investors poorer by nearly 6 trillion rupees as a spike in oil prices shook investor confidence. An unexpected call by US President Joe Biden to ban oil imports from Russia, coupled with delays in the potential return of Iranian crude to global markets, fueled tight supply fears. Crude oil prices touched their highest since 2008, while rupee touched historic low of 77 per dollar mark as war in Ukraine threatened to inflate India's oil import bill and fan inflationary pressures. Equities too came down crashing, with the benchmark S&P BSE Sensex and Nifty 50 sinking 2.7% and 2.3% respectively yesterday. They hit their lowest levels in 8 months. The two indices have corrected 15% from their lifetime highs of 62,245 and 18,604 claimed in October last year. According to analysts, India faces meaningful risks in terms of higher inflation, lower corporate earnings, trade shock and current account deficit implications. This is because India imports nearly 3/4 of its oil, making it one of the most vulnerable in Asia to higher prices. Estimates suggest the Indian economy could incur an additional $70 billion burden, or 1.9% of GDP, at an average crude price of $120 per barrel. Analysts at Bank of America believe if most of Russia's oil exports are cut off, there could be 5 million barrel or larger shortfall globally. That means oil prices could double from $100 a barrel to $200 a barrel. JP Morgan analysts meanwhile expect oil to soar to $185 per barrel this year. A marginally conservative estimate by Rahul Kalantari, who is Vice President for Commodities at Mehta Equities, suggests that WTI prices could test $140 per barrel and Brent prices could reach $134 a barrel going ahead. Technically, crude oil has support at $118 to $110.4 per barrel and resistance at $129 and $140. Given these headwinds, we have Alphaniti FinTech co-founder UR Bhatt with us to understand the road ahead for the markets.
I've been sellers for quite some time now, but the DIIs and the retail partners have been more than compensating by buying. But if you see over the last few days, FII selling has intensified quite dramatically. I mean, it was about $200-300 million per day, but now it is nearing $1 billion a day. So I'm not very sure that our domestic institutions and retail can really compensate this for too long. They don't have that sort of muscle to keep buying when FIIs are selling in such a big way. So therefore, I think that equilibrium will probably get reset at lower levels. So you really have no sort of good news coming from anywhere. All the bad news is just sort of getting punched up and coming. And we don't know how this talk of terms of nuclear misadventure and all that. So therefore, I think market will continue to be very, very gripped by fear. And so therefore, I don't see, given the state of news that we are seeing, that there will be some respite immediately, or that whatever the fears are there at these levels are unfound.
Meanwhile, tech charts too suggest more downside for the markets.
This is the first time both the indices, Sensex and Nifty, have broken 50 weekly moving average. Last time when it did so, it was in mid-2021. Both the indices have broken sentimental support levels of 54,000 for BSE Sensex and 16,000 for Nifty 50. Here on, for Sensex, as long as it trades below 54,000, there are higher chances it can slip to 50,000 levels. The immediate resistance, higher side selling pressure resistance, comes at 56,000 levels. For Nifty 50, it is 16,200 and 16,500 are the major drop down mark. In the sense, this level when violated, it could have shown a decisive reversal, but it failed to do so, and there are higher possibilities it is heading towards 15,000 levels. On the upper side, as long as 16,800 is not taken out, this index is here to stay in a weakish scenario for some more time.
On Tuesday, the markets will continue to monitor global developments besides taking guard for the outcome of assembly poll results across 5 states: Uttar Pradesh, Punjab, Manipur, Goa and Uttarakhand.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Gujarat's GIFT City has now opened a window for Indians to invest in prominent international stocks. Entities which are owned by BSE and NSE and are based in Gujarat International Finance Tech City or GIFT City in Gandhinagar now let retail investors buy and sell stocks of US firm. Our next report tells more about National Stock Exchange International Financial Service Center or IFSC, which is allowing trading in 8 US stocks and will soon increase the count to 50.
The National Stock Exchange of India's wholly owned subsidiary NSE IFSC is located in Gujarat's GIFT City, which is India's first international financial services center. Stock exchanges operating in the GIFT City are permitted to offer trading in securities in any currency other than the Indian rupee. From March 3rd, NSE IFSC launched trading in 8 US stocks like Alphabet, Amazon, Tesla, Microsoft and Netflix in the form of unsponsored depository receipts. It will be later increased to 50 in a phased manner. The trading, clearing and settlement and holding of US stocks will be under the regulatory structure of the IFSC authority. Currently, the product is under regulatory sandbox for a period of 9 months. The number of investors that can be onboarded during the sandbox testing phase is limited to a maximum of 10,000. Investors will be able to hold the depository receipts in their own demat accounts opened in Gift City. They will be able to transact on the NSE IFSC platform under the liberalized remittance scheme limits prescribed by the Reserve Bank of India. LRS allows Indian individuals to freely remit funds up to $250,000 outside India in a financial year. An NSE IFSC receipt is issued by HDFC Bank's International Banking Unit in its capacity as the NSE IFSC receipts custodian on the basis of underlying securities issued by a US listed company. The receipts are not sponsored by the underlying companies. They are unsponsored, meaning the receipts are created without the involvement, participation or consent of such US listed companies or of the US exchanges on which such underlying securities are listed. The receipts give the holder a proportionate beneficial interest in the underlying security itself. Their issuance is based on the underlying share to IFSC receipt ratio as defined by the NSE IFSC from time to time. Therefore, an NSE IFSC receipt represents a fraction of an underlying share, making it affordable for the investor to participate. For instance, one Amazon share that costs about $2,900 is converted into 200 IFSC receipts worth about $15 each. The ratio is reviewed from time to time. The receipts are issued and traded in US dollars, and any amount paid by the NSE IFSC receipts custodian in connection with them will be paid in US dollars. The underlying securities are held by a US custodian on the instructions of NSE IFSC receipts custodian. The receipts are issued by NSE IFSC receipts custodian based on the deposit of underlying shares with the US custodian. One can buy US stocks on the NSE IFSC the same way they can buy other Indian securities. Firstly, the investor has to open a trading and demat account with any of the NSE IFSC registered brokers. Then, they are required to transfer funds from their local bank account to the registered broker's bank account. Once the funds reflect in the broker's account, the investor is ready to trade in NSE IFSC US stocks. All investors would be eligible for corporate actions such as dividend and bonus issues. The settlement of funds and NSE IFSC receipts will follow a T+3 cycle, which means the depository receipts are credited to the demat account after 3 days from the day of trade. Funds from the sale of receipts will also get credited after 3 days. Some of the charges levied on the investor include brokerage charges, exchange transaction charges, receipt issuance fee, and demat account charges. An investor can also request the conversion of the NSE IFSC receipts into the underlying share. The investor has to submit a cancellation request to take delivery of the underlying shares in a US brokerage account.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार, 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट।
Finally, I agree.
SBI is the banker to every Indian.
BSE-owned India INX, on the other hand, acts as an intermediary platform where investors can transfer money straight from India to the US or to the other foreign countries. That's all for today. We will be back with more news and analysis on the next episode. Stay tuned and thank you for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.